Look, inflation isn't some distant problem you can ignore or push to the next quarter. It's here, slamming your fund's returns, shaving your margins, and forcing you to rethink everything, right now. You feel it. The rising costs, the unpredictability, your portfolio companies struggling to keep up. It's frustrating as hell. You're used to controlling the game, but inflation's waving a big ugly red flag, destroying your forecasts and dragging your strategies into chaos. You're sitting on assets that are suddenly worth less in real terms. Or worse, stuck in businesses that can't pass costs on to customers. That hurts. It's infuriating to watch your carefully built models crumble because the rules have changed overnight, and nobody's giving you a new playbook. But here's the raw truth. If you don't adjust fast and smart, someone else will eat your lunch. The naive mistakes, waiting too long, relying on old data, ignoring early signals, they're the quick road to disaster. You can't just cut expenses blindly. That's a band-aid on a gunshot wound. You need precision, timing, and a bold rethink of core thesis. Step 1. Get brutal with sectors. Inflation doesn't hit everyone equally. Stop backing the tired winners just because they were safe before. Look for industries with real pricing power, those that can raise prices without losing customers. Consumer staples? Maybe. Tech? Depends. Energy? Currently, hell yes. Go deep into unit economics. If your companies can't earn more when input costs rise, pull back now, not later. Step 2. Rethink capital deployment. Chasing growth at all costs was yesterday's game. Inflation kills margin erosion. Shift focus to cash flow stability, operational efficiency, and resilience. Look for companies with strong pricing strategies baked into contracts, or where long-term supply agreements lock costs in. If that sounds boring, good. Boring is safe right now. It's about survival and real returns, not flashy multiples. Step 3. Leverage currency plays aggressively. Inflation is global but uneven. Funds that adjust their exposure to currencies benefiting from inflation hedges can protect capital. Don't just accept your home currency's performance as the final verdict. Currency strategy is a weapon you're probably sleeping on. Step 4. Speed matters more than ever. The fund that hesitates loses. Set tighter. KP is for portfolio companies related to inflation impact and force action weekly. Slow decisions are losses. Demand real-time data on cost impact, pricing adjustments, and market shifts. If your team isn't capable, fix the team or step aside. No room for "we'll see" anymore. Step 5. Transparency with LPs is non-negotiable. They're watching every number twitch. Own the narrative. Show them your plan, your response, your risks. Silence or sugarcoating kills trust fast. And finally, don't just survive. Position to win post-inflation. Inflation periods crush weak players, but they also create opportunities for those who acted fast. Hunt for underpriced assets, distressed businesses with real value, and leaders willing to pivot quickly. Be the ruthless allocator who doesn't wait for the world to heal but forces the shift. This isn't about hoping inflation cools down or waiting for central banks to fix it. It's about owning reality, grabbing the reins, and adjusting the fund's DNA. Be relentless about where capital goes, how it grows, and who's leading the charge. Ignore this at your own peril. The market is ruthless. If you don't move now, you become a casualty of your own hesitation. Adapt quickly, think differently, and command your fund with unshakable clarity. That's how winners survive inflation shocks, by turning chaos into advantage while everyone else panics. Subscribe to our YouTube channel and check the featured link to discover more.